Well, my name is Dave Zapponi, and I'm the CEO of ECHO. I want to welcome everybody here today. ECHO is otherwise known as the Educational Council of Homeowners. I want to thank you for participating in this community conversation, banking, security, and recent fraud activity. ECHO is a statewide nonprofit association established to support HOA board members and engaged homeowners. Our mission is to foster a better quality of life in community associations through education, advocacy, and connections. For today's event, we have a few housekeeping items. These are now presented on the screen. In addition, slides were sent to registered attendees beforehand. Please take a few moments and review the housekeeping items. We have many HOA board members in attendance today, which usually means we're going to have a lot of questions. We will do our best to answer those questions in the time allotted. Please use the Q&A icon, not the chat icon, but the Q&A icon to ask your questions or make comments. You should use the chat icon to report technical issues and to communicate directly with other participants in the webinar. You will find these navigation icons by hovering over the bar at the bottom of the screen. I will respond in writing to some questions in the Q&A feature during the presentation. All other questions will be answered in the Q&A feature section at the end of the seminar after the war stories. Please keep your questions general in nature. Questions about specific situations are better asked one-on-one with your professional. To help us select the most relevant questions, please use the thumbs up icon, which is found in the Q&A screen in the bottom left corner. Simply click this upvote icon to select your favorite questions. And now for our disclaimer, which you'll find on your screen. None of what is said during the seminar shall be construed as specific legal or expert advice from the speaker, sponsors, or ECHO. If you wish specific advice, we encourage you to contact your attorney or a suitable expert. Thank you. Today we have several sponsors. Please join me in thanking our premier sponsor, the Kevin Boland Insurance Agency. Today's registration sponsors are Levy Erlinger and Company CPAs and Silver Creek Association Management Company. Now we will have a few words from our premier sponsor, the Kevin Boland Insurance Agency.
Hi everyone, my name is Kevin Boland and I'm a farmer's insurance agent based in our beautiful San Francisco Bay Area. I am very proud again to be a premier sponsor of this ECHO educational event. You know, I sit on my board of 214 homes, and trust me when I tell you that I've learned so much in the last couple of years. Thank goodness for this ECHO organization, for all the educational support that it provides us as board members. I wanted to let everybody know that Farmers Insurance for the past 7 years has been offering cyber liability coverage in our policy. And we start at $50,000 and we go all the way up to $1 million of coverage. Secondly, if someone were to steal money or embezzle money from you 2 or 3, 4 or 5 years ago, Farmers Insurance will still reimburse you today. It's great coverage to have. If anybody has any questions about it, please reach out to me. And of course, if anybody would like a professional review on your association's insurance this year, please reach out to me as well, because I continue to get fantastic rates with Farmers Insurance.
Well, thank you, Kevin. We appreciate the words and your sponsorship today. We will be giving away a $50 gift card, courtesy of Divergent Consulting. Please stay until the end of the webinar for a chance to win. And thank you to all of our sponsors. They make this event affordable for everyone. We will now move into our planned presentation presented by Chris Lucas of Heritage Bank of Commerce and Bill Erlinger of Levy Erlinger and Company, LLP CPAs. Chris is the Vice President and HOA Relationship Manager at Heritage Bank of Commerce. She joined the Heritage HOA Specialty Banking team in 2016, supporting 95 management firms and their association clients. Chris's banking career has spanned over 30 years, of which 25 were focused on the HOA industry. In recent years, she has a portfolio community association manager. She was a portfolio community association manager in the Bay Area. Chris has a long-standing banking relationship with HOA communities, primarily due to her caring, consultative approach and a deep knowledge of the HOA industry. Let me add, this is a personal note, that she is always positive and solution-oriented and a supportive member of our community. Our next speaker is William Erlinger. William Erlinger is a brilliant accountant. He received his BS in accounting from the University of California, Berkeley, his MBA in finance from Boston University, and his MS in tax from California State University, Hayward. His MS tax thesis was on taxation of homeowner associations. Mr. Erlinger was instrumental in working with the California Franchise Tax Board to be more responsive to policies affecting California homeowner associations. These include the online publication of the exempt organizations and exempt application requirements. Bill is an active member of ECHO, including the former chair of the Accounting Resource Panel. He also is a regular contributor to the ECHO Journal, Insight, and a member of the ECHO faculty. And Bill will be discussing an event. We just agreed to a tax event later this year in November of this year. So we hope that you all participate in that. Bill has always been good and generous with his time. And now I want to hand this over to Chris to start the program. Thank you, Chris. We look forward to having your program.
Great. Thank you so much, David. Really appreciate it. And for those nice comments. So we're going to talk about fraud, and you noticed I titled it in a scary way, a real chiller. And it is very scary. But all around us, there are nefarious people, individuals that are constantly looking for opportunities to part you from your monies. Definitely on the consumer side, individuals, you know, we're all subjected to that. And it is really scary. In the big scheme of things, when it has to do with businesses have lost millions of dollars. Businesses and companies have gone out of business because of fraud. It affects everybody, individuals, banks too, their reputation when there's fraud that happens. And so it is really, really a scary situation. But if you're a little bit vigilant and taking care of things, it's not so bad. So we can have a nice day, but let's move on. So I provided all sorts of little facts here in the last year. As you probably are aware that fraudulent activity really skyrocketed during the pandemic. And for obvious reasons, there's, you know, people take advantage of situations where, you know, people are stuck in their homes. They're not watching things maybe as much, and it allows for the criminals to really take advantage of different opportunities. So there's been a lot of, if you think about it, people had to wear masks often as they go in, and so it's easier to hide themselves. So definitely identity theft was one area that really has skyrocketed in the last couple of years. In the last 2 decades, we've seen a lot of type of fraud activity with regard to Ponzi schemes and investment schemes. That's probably the largest losses per victim, as you can see on this slide, where people have lost a lot of their savings and incomes due to, you know, some type of Ponzi scheme. And so, as I said, this is a huge issue that we're all in together, and we must be, you know, vigilant to make sure that we are not a victim. So you wonder, well, who's doing all this? Who is creating these crimes? And there is this 10-80-10 rule that you can kind of follow about, and that is there's 10% of all individuals will never, ever commit fraud. even if a situation or opportunity presents itself. And why? The thought of doing anything wrong is just adherent to them or abhorrent to them. And I would put like Bill Erlanger in this category. I like to put him in there. These are the angels of the world. And then the rest of us, 80%.
Overstated, Chris. Thank you.
You're welcome. And there's a big wide spectrum in the 80% that most of us are there. We're good people. We won't, commit any kind of fraud, but do we ever like maybe take some paper clips or notebooks, from the office that maybe we shouldn't, considering that is like stealing and fraud. Maybe some people have not been totally honest on certain things like tax forms or whatever. So you have that group of people that pretty much they are not in the business of committing fraud at all. However, in saying that, on that big wide spectrum, there's a few that could tip over into the 10%. And the 10%, they're absolutely looking for opportunities to commit fraud. These are the career, criminals that are working right now as we speak. Someone's in that garage or basement on the computer looking to commit phishing and other things to get data, or figuring out how to take advantage of catching checks and other things to commit check fraud. So one of the interesting things on here is that 55% of fraudsters have no history of any workplace. And we'll get into that in a minute in the next slide about why that is. And it really has to do with situations that have changed, the opportunity, and rationalization. And then, sorry if I don't want to offend anybody, men versus women, or however people are identified as. And the reason why I put Granny up there versus the individual with the computer is that men, basically 72% of the fraudulent activity is committed by men. And, but women we've seen some stories where they've embezzled a lot of funds from companies, and primarily due to situations. So men versus women, anybody could commit fraud. And it's important to really understand a person's actions, their situation, and to make sure that they don't have the opportunity to commit fraud in the business. So if you think about 72% of men, and in the state of California, there's something 24 million, and then half of the adult men, that would be like 12 million people. And if we take the 10%, that could be 1.2 million people actively looking to commit fraud. So just something to think about. In the next slide, there was a really interesting thing that a criminologist did, and created a fraud triangle, excuse me. And it shows how somebody who normally would not commit fraud, could be, incentivized to commit fraud. And so, you could see on perceived pressure, people that all of a sudden lose savings, they may be in high debt, maybe a sick one, a relative became sick, and all of a sudden they have mounting debt that they have to take care of. It could be somebody that wants to keep up with the Joneses and has a very expensive lifestyle and has to constantly keep getting money. So the perceived pressure gives you the motivation to want to commit fraud. And you think, well, how's that have to do with associations? Well, has to do with the people that are taking care of the accounts, your accounting department, could be a manager, could be a board member. You just don't know. But that's one of the characteristics of somebody that could be in a situation where they actually need the funds. That pressure also could relate to that perfect employee that hasn't done, they're just so loyal and have has done a great job for 20 years, and all of a sudden something changes in their life. You know, somebody passed away and they're now having to take care of things, and again, debt rises. That gives them that incentive and motivation to maybe commit fraud for the first time. So you just don't know. There's not a perfect picture of who a fraudster looks like. So the opportunity there is where you really have to be vigilant on taking care and protecting the information. Because if the person is in that situation and they are going to look for the opportunity, it's going to be a lot easier for them to act upon it. So some of the things in the next slide to continue with the opportunity is that this is where the situations where they might find, you know, a checkbook in an unlocked drawer, and they might take that middle check out of the checkbook and write themselves a check. Computers, you know, people don't lock their computers at night and keep things open. It's amazing how the fraudsters, the really bad ones, can go into and try to get that information, grab and sell it on the market. A big one that we see with associations is when they have debit or credit cards for, you know, purchase of sundries, and it's usually an on-site person or, you know, a board member or so. And but they keep it in a place where maybe it's in the clubhouse or some other office that has access to other people. It could be the custodians and others. And if they leave a credit card or debit card open for someone to have that opportunity to take, that's definitely not a good thing. And this, we've seen this happen a few times. And not only did it happen, but there were, you know, notes on the credit card with the PIN numbers. So you can, you know, to make it awfully easy for them to steal the funds and use the card. We talked about intercepting checks in the office, but this is another area where the fraudsters will look for opportunities. Let's say a board member has signed checks. It was mailed to them. They signed checks, especially during COVID. And then they left it out on their mailbox for the mailman to pick up. Well, then somebody that sees that opportunity might grab those checks, and then they'll forge or basically alter the checks to then try to cash them. You know, there's controls with electronic transfers whereby the individuals that are handling the ACHs on online banking, usually it takes two people to make those transfers, and somebody might share their password or leave it open so that someone else, another employee, could easily go in there to transfer funds to a different account. So really important not to create the opportunity for anybody to do the wrong thing and commit fraud. The rationalization part of this is really interesting because, you know, all of us know, because we're not psychopaths, that, you know, there's a right and a wrong. And we know deep down not to commit fraud or lie or do those, you know, horrible things. We know it. So people that do it, that normally don't, we said, what, 55% people have never committed fraud. They're going to find some kind of justification to do it. We know their incentive and their motive and opportunity. So you can see on the rationalization, you probably have seen this before, is that, well, it was my only first time, I'll never do it again. Or, you know, the company doesn't pay me enough, you know, I deserve this. So there's a lot of rationalization that goes into this. But the true criminals, that 10%, no, it's a career for them. They absolutely have no moral compass at all. And those are the ones we really have to look out for. So the next slide, we talked about, you know, there's been changes over the years in the last 2 decades. I don't think I was here for 30 years. Is that what David mentioned? I think it's only 27, but we've seen a lot of changes in the banking industry. And one of the things that happened that's changed, we used to actually to process a check, it would take 3 to 4 days, maybe 4 to 5 days. We used to follow these float charts. And the reason why is that checks were exchanged. You see the little stagecoach down there in the picture. Literally those, coins and cash would be transferred that way. But, in the 80s and early 90s, we definitely exchanged checks with other banks through literally trucks and airplanes. And so they were working on the ability to be able to exchange these checks and make those funds available sooner for about 10 years. But then 9/11 came, and so they definitely pushed that forward, and that was check 21. So all of a sudden, a regular check that was reviewed and it took 3 or 4 or 5 days to make the funds available, now could be exchanged with one another electronically. And that was a huge breakthrough. But with all that great technology came very scary things, right? It was much easier to fake a check now because we were accepting basically copies of checks. And with the printer technology, you probably have seen where people can duplicate checks just beautifully and create their own. And, so it was easier to, commit fraud on altered or fake checks. Other technology that makes really difficult is mobile apps today. We saw one situation where somebody took the picture of the check through a mobile app and the bank credited it, and it was a fraudulent item. And the banks have to provide the availability of funds within 2 days now. So no more long 5-day float. It's really within 2 days. And so the receiving bank should have checked on that mobile app and, reversed it, but it didn't happen. Part of that too is with kiting. A lot of the fraudsters, they'll make deposits in one account and create another account. And before the funds can be cleared or returned, because it's a fraudulent activity, they've already emptied the account into a third account. And that's where kiting comes in. That was a long standard fraudulent mechanism that people, committed over the last 2 decades. Banks are much better at communicating with one another and catching these types of fraudulent activity, which is good news. We also have check fraud, or check stock, excuse me. We see before we had to send out books, and now we don't have to. A lot of management companies today will use a third-party vendor to create these payables, and even those payables can be converted to electronics. So the good news on that is that the checks are not sitting in a drawer somewhere anymore. Pretty much management companies and board members don't have to keep those checks somewhere, on them or in the office. So that works really well. Technology with the ACH services is great. That's another way of paying your bills without sending out a check that can be intercepted and then by the bad guys and create and forged and altered. And the ACH services works great. However, there's a higher level of risk there because it depends on who is sending out that ACH file. And the ACH file is electronic funds transfer through the automatic clearinghouse. So the management companies are the ones who are usually doing this, or self-managed board if they're have the computers to do it. But it is important to have a dual control because that way you have more oversight, on that. And it ensures that somebody is not sending those funds to a personal account or elsewhere. So the dual custody really means one person initiates it, another person actually reviews it and approves it. And that's a good practice to have in place. Wires are really interesting. We don't even allow for wires at our particular bank, but for HOAs, because once those funds go out, that is it. And it's very hard to get those funds back. Usually it would be a loss. And there's really no reason for an HOA to be able to wire funds. You can certainly wire funds if you're moving your funds from one bank to another and establishing an account. We certainly would accept an incoming wire, but it's just not worth it to have wires. Most associations pay their vendors either by check or third-party payables or via ACH. It has a little bit more control that way. The other technology is, the big one is computers. And, for individuals, it's a big deal when you get your email hacked and somebody is pretending to be you, right? I'm sure a few of you have been subjected to that. It's very scary. Had one association whose email was hacked, and immediately they requested to wire funds. So they didn't know that we don't do that. We were able to confirm with the individual that it was a fraudulent activity. And with that comes phishing. This is what the criminals do all day long, is to fish and see what they can find out. If they can hack your email, they can get all the data that they can sell and all sorts of personal information. Part of that is, to be very vigilant of not listing your full account numbers anywhere and other, information for the association, so that if you ever did get your emails hacked, that you have a little bit protection there. The signature cards, the technology today is that we can do this via DocuSign, but we still would want to have facsimile signatures in there. They're not digital. Banks have to be able to view larger checks, and the way they do that is to look at the signature card for the real signature, that it matches perfectly with the checks. And those are the checks that we look at, are the high volume items, the big ticket items. And we also randomly view checks. But as you probably know, banks can't look at every single check. There's too many checks that get processed. So it's really important to have best practices and making sure that you have the appropriate signature on the signature line, and especially if it's a reserve account, that there's two signatures. So the next slide is just some issues, some best practices, but also red flags, some warning signs to be careful. So you have checks that are out there to pay for vendors, and the vendor never received the check. It's important for vendors to not sit on these checks. It's amazing that that does happen. It could be 4 or 5 months before they decide to do it, and a stale check is basically 6 months. So it's important to reconcile those statements, and if there are outstanding checks, to contact your vendors and ask them, why haven't you, have you received it? A lot of the fraudulent activity we've seen is exactly this. The vendor never received it. The checks were intercepted one way or the other. And so what you need to do is place a stop on that check, and also contact your HOA banker. It's really important to let them be aware, because they might see something else that's, off. Sometimes when you find out, it's already too late. The check was already processed, and then we have to deal with that. So it's important for the managers, or accounting department, and self-managed associations to review the activity often. And when I say often, that means maybe, 2 or 3 times a month. If your checks were mailed to you and they were stolen, and really 2 things you need to think about. One, you could put the accounts on positive pay. And what that means is that the management company will give you give the bank a check run, basically, of all the checks that are good to pay. And anything that is not on that check run that presents itself to pay would be rejected. But I have to say that even with that, with a restriction or positive pay in place, your best protection is really to close the account and open a new account. That's would be our first recommendation. It may be a little inconvenient, but not so much. We can move everything in a day, and then we can find out what the outstanding checks are to make sure they are posted to the new account, and then work with you to make sure those that do present themselves are good checks. And we talked about the email hacking, what to do in that, just keep, don't list the full account numbers, use secured emails and drops. This is a big one. We send secured emails all the time if we do have to provide full account numbers or the signature card via email. We send it securely, and we have a secured link for our clients to send that email back with information via our secured email. But often that doesn't happen. So you're always a little subjected to potential fraud if emails get hacked. So that should be an area that you should take a look at in best practices and making sure your emails are safe. Other types of fraud that we see is the altering of the check. So you've seen this, it's kind of hysterical. There's a check made out to ABC company, and the people that intercepted the check, they'll just add their name to it. So it's ABC company and Ms. Lucas on there, and then they try to cash the check. And sometimes that goes through because banks can't look at every check. So again, it's something that we have to be vigilant in watching and reconciling, looking at the activity to make sure that we can catch this stuff and do it in a timely manner. We did already review ACH and wires and check stock that's stolen, what to do on that. And the credit and debit card fraud, again, is a big one for associations that use it. If your debit or credit card is compromised, you need to contact your bank, terminate the card, reissue a new one. And again, don't leave any information that the criminals can pick up to use your card. And so when this happens, who is responsible? It's really important to make sure two things. One, you contact your bank immediately so we can help you. We may have you sign an affidavit, or the board sign an affidavit describing what happened and the nature of the fraudulent activity. But banks, we have an obligation to, process checks, within the 2 days, and also give provisional credit on an account that might have been on a check that might have been suspect. So until we can get it resolved. So it's really important, though, that you do a few things, because the bank is going to want to know how this happened and if there wasn't good practices followed that caused the fraudulent activity, especially if it's in-house and could have been avoided. So things like, were the bank statements reviewed in a timely manner, or has it been 6 months since they took a look at it and noticed the fraudulent activity? Checks that are used, are they secured checks? Do they have the watermarks and other things that help to make it very difficult to alter or change? And mostly the internal controls that are really important. Did they lock up their checks? Was the ACHs, were they done dual custody? Was somebody sharing passwords? These are important things to know. Banks spend a lot of money in this area in trying to recover lost income for associations and all clients. And we do work with not only local law force, but different organizations and agencies to stop this fraud. So in the next one, we have best practices. Real simple. The update of the signature cards, it's amazing. Just had a conversation this morning about this, that associations tend not to update their signature cards on an annual basis. It's kind of rare to see an association have the same signers for 5 years. Usually someone is going to go off the board and a new person comes on. And they really should be viewed at the annual meeting when you have your elections. You should contact your banker immediately to get those signature cards updated. Especially if there's transitions between the association and management firms, a lot of management companies are signers on the operating account, and they should, it's not just a matter of removing them. We have to replace the signature card. So really, really important. It's as board members go off, new ones come on, that you update those signatures, because that is going to be really important when we're reviewing checks. You should keep good records on where your accounts are. This is something that comes up a lot. It's not that it's fraudulent activity, but it's definitely a loss of income. If you have reserve accounts at multiple banks and you don't know where they are, and maybe at one of those banks you have a CD, and the CD could be, let's say it's a 2-year CD, that could just keep rolling and rolling. And if you don't update your signature cards, that could be a real issue, that you want to close that account or change the term. And there's nobody that's on the card that can direct the bank to do that. So this is a huge issue that we see often. The escheatment means that if there's no activity after a certain amount of time, those funds can be escheated to the state, and it takes a while. And I think Bill can review that in a little more detail, but it takes time to get those funds back. So really important to know where your funds are located, to keep those signature cards updated as board members change. The other part, a loss of, not so much loss of income, but definitely an issue is FDIC insured accounts. All banks insure up to $250,000. So it's good to check with your friendly HOA banker to see if they have placement services where they can move the funds outside of the bank to make sure everything's 100% FDIC insured, but only have to deal with you as the one bank. And that kind of brings it to work with a bank who specializes in HOA banking. They have a better understanding about your needs, how associations work, and how to help you with their products and services. So just one last slide, I believe, is I just left some information to help for fraudulent. A lot of it's for consumers, but there's a huge national organization for ID theft, which is a big deal right now that does bleed over into HOAs. And FBI, Federal Trade Commission, all important stuff, and your local authorities are really important if you do have any kind of fraudulent activity, to get some additional information and support. So for that, I'm going to turn it over to Bill.
Thank you, Chris. Thank you. And I think we'll have a lot in common here, our presentations. And thank you, David, for mentioning that the tax seminar that's going to be in September. He wants me to do it for 12 hours, and I think I maybe could do it an 8-hour seminar. And if anyone could stay awake, it also leads to, maybe you want to know what CPA stands for. If you ask my wife, it stands for constant pain in the arse. Otherwise, it's certified public accountant. With the lightness started out here, I'm going to launch up the presentation with a poll. So this comes from the Association of Certified Fraud Examiners. In 2021, it's worldwide fraud, about 5,000 of them. which one would you think is the most common way that a fraud is uncovered? This is listed alphabetically, by the way. So accidentally, the CPA audit, internal audits, that means that management does its own investigation, own audit internally. Other, or tips, that's a whistleblower. So the clock's ticking, and make your best guess.
We'll give them about 40 more seconds, Bill.
Sure. Okay.
So do you have any more accounting jokes, Bill?
What's that, Dave?
Do you have any more accounting jokes for us during the 40 seconds?
Geez. I tried. Oh yeah, I did. I asked Alexa. Was it Alexa this morning? And I said, "Do you know any good CPA jokes?"
That was the answer.
That was it. There you go. That's the joke. Didn't answer. No answer. Anyway.
I thought they were going to say CPAs don't joke. They're too serious.
or what's their favorite color? Plaid. You know.
Okay, Bill. The poll is done.
All right.
And I'm sharing the results on the screen right now.
Wow. Some of you are going to be pretty surprised. I'll accidentally. Yeah, that's right. 5%. CPA audits, 4%. Internal audits, 16%. Other is 33%. And the number one way that a fraud is uncovered is by tips. Those are for co-workers, vendors, board members, things like that. So pretty surprising answers. Oh, great. Thank you for participating. And with that said, I'm going to switch over into the next slide. There are two types of frauds. There's the one most common, which we talk about most often, and that is what this presentation and Chris's presentation was about. That's the theft of money. And the other kind of fraud, which we won't talk about, and this is the one that's probably the gist of all the rumor mills and so forth, are kickbacks by vendors to whoever of money and or services. You know, the rumor mill is that's how the board member got their interior, whatever, painted or something like that. Those kinds of frauds are next to impossible to uncover or discover, but they're the ones that everyone can gossip about. So moving on to theft of money, let's talk about best practices that a board can implement and that also are good for possible detection, prevention of fraud. And some of this is already in the Davis-Sterling Act, and it's a requirement of the board to look at financial statements. And part of that requirement is to compare actual revenues and expenses for the month with budgeted revenues and expenses. Look them over. And if there's a discrepancy or variance you don't understand, ask a question. Of course, I mean, if it's a $5 difference actual to budget, don't bother anybody over it. But if there is something else, if there's a large variance, you need to ask a question. And if the manager doesn't know, make sure that they get back to you. Or if you're self-managed, look at one another and try and come up with a reason for it. Because there might be a reason that's one that's not a very good reason. Somebody took money that doesn't belong to them, doesn't belong to the association. The next, about transfers between accounts. This goes back, this was the, I could say the way that Bob Pyrie, for those of you who may or may not know, Mr. Pyrie goes back about 30 years. Mr. Pyrie was a fraudulent manager. And one of the ways he'd steal money is that he would show transfers between accounts back and forth, and all of a sudden the money would disappear. You see, if it's an outstanding check on the operating bank account to the reserve account, it ought to be a deposit in transit on the reserve bank account. And if it isn't, you need to figure out why. It could be because of the statement differences. The operating statement may cut off 10 days before the end of the month, while the reserve bank statement may cut off at the end of the month. But if you should look at those deposits in transit and outstanding checks between the two accounts. If you see an outstanding check on one, there ought to be a deposit in transit on the other. Okay, I've beaten that to death. Let's talk about, and Chris also mentioned, wire transfers. Wire transfers in German should be verboten, forbidden. Do not make them, do not allow them. And it's good to hear that at least one bank will not permit them. It's a sure way for an association to lose money and never get it back. There's an example of a management company where a manager's email got hacked, and a fraudster sent an email out to the accounting department, the management company. And so the accounting department saw an email purportedly from the manager. It was from the fraudster, and the fraudster said to the accounting department, wire $50,000 from this association to, and he gave them some account number, or she gave them some account number. And the accounting department believed it was a legitimate request and did it. Well, the money's gone. And so it's just way too easy. The other thing that Chris mentioned, and I left off the slide here, is the use of debit or credit cards. I understand that it's a great aid to allow those vendors or employees or contract employees to have a debit or credit card, but no good comes of it. It's much simpler that either for board members, they use their own credit card and they get reimbursed for it, and everybody can see exactly what was purchased for the association. Okay, at least annually, you should ask for and look over a printout of all association vendors. Take a look at them. If there's a vendor you don't recognize, that's a good sign that maybe it's a fraud. It's one of the war stories that there's a management company that had a manager create a fraudulent company, and periodically payments were made to this fraudulent company. So if everyone had looked, if board members or the management company had looked over that vendor list, they would have wondered about this company. Who are they? What do they do? You should look over the monthly check register and the related invoices. If there's a payment to a vendor you don't recognize, ask a question. If there's an invoice that you see that you don't recognize, ask a question. Okay, so let's talk about, next slide, smart decisions that not necessarily are good fraud prevention and detection tools. Chris mentioned about there's a banking term they're called evergreen CDs. Those are CDs that have this automatic renewal feature that a month or 10 days before they mature, the bank sends a notice out to the last address or record saying, if we don't hear from you, we're renewing the CD at whatever terms that they tell you. And if you don't say anything, the darn thing gets renewed. And then you may have trouble getting the money back if you want it. So you should not get these evergreen CDs. And also CD related is in your monthly board package, even though the CD, when it renewed, provides a statement, and it doesn't provide a statement each month, there ought to be in that monthly board package a copy of that statement, even though it could be 4, 5, 6 months ago, as a reminder to everybody that that CD has a maturity date and that you need to be thinking about what you're going to do with the money when that CD matures. Now, I'll touch on maturing CDs a bit in a moment. The other is, I know this is also a very hard pill to swallow. You might have too many bank accounts. As a suggestion, you might want to consider having 3 bank accounts, 1 operating and 2 reserves. And one of those reserves is a CDARS account, which we'll talk about in a minute. So too many bank accounts with too many banks, and next thing you know is you might have trouble with money, and you don't want that. And lastly, you got to consider just banking with an HOA experienced bank. even the branch of an HOA experienced bank is not the best place to go. Stick with those the HOA department of those banks. You might say, well, they all have FDIC insurance, they're all banks. While that's true, it's not exactly the best way to go. It's like, I mean, all physicians went to medical school and are licensed by the medical board, but you don't want to go to the heart specialist when you have stomach issues. So stick with an HOA a bank. Anyway, enough said about that. So remember that I said a CDARS account. A CDARS account is like a brokerage account, except it's at a bank. And the CDARS account is money that's in various banks, all within the $250,000 limit, that when they mature, they stay within that one account. So you only get one account statement every month, but within that account statement are multiple CDs, similar to a brokerage account. And that's another thing to consider, keeping your money at a brokerage. But the money's all within this one account. And you can also have a relation with the CDARS account that allows you to almost write checks on them. I'm sure Chris could describe that feature a lot more later on, so that you can keep 200,000. If you keep 100,000, maybe in your operating account, you could have $300,000. 100,000 you write checks on, the other 200,000 is invested, earning some interest, but it's also insured with FDIC insurance. Okay. I think I've beaten that to death. So kind of segueing off into the tax area. These are just general pet peeves or pet headaches. I don't know if I could tell you 50 times, maybe more a year, I get a question that the question is more of a, not really a question, it's more of a challenge. The challenges that come as a question is that, well, our association is a nonprofit. Now, I have no idea, I can guess where the questioner got the idea that their association is a nonprofit. You see, 100%, well, it's an overstatement, just about 100% of homeowner associations are nonprofits in civil law. You'd have to ask your attorney exactly all that meaning, but in civil law, you're a nonprofit. That's what it says in your articles of incorporation. Great. But that wasn't the reason you called me or you asked me in the email or you challenged me that we're a nonprofit. You asked me, and that the answer falls within tax law. And tax law, your homeowner association is not, I'll repeat, is not a nonprofit. It is a regular, sorry to use the expression, C corporation, subject to tax, just like Google, IBM, Tesla, just like all of them. So you just have different income that's subject to tax. Now, oftentimes you get the challenge, someone went to the bank and wants to open the account, and you tell the banker that you're a nonprofit. And in the banker's ears, nonprofit means 501c3. And your association is not a 501c3. When you pay your assessments, you don't claim any charitable deduction for that. I'm making light of it. But some associations are 501c's, but they're not 501c3s. And even if you're a 501c something, you're going to pay tax on certain kinds of income. So the idea that your association is not going to pay any tax at all, no matter what, is untrue. There's probably some kind of income that you're going to pay tax on. Most of the time, it's interest income from banks, not the interest income that delinquent owners pay your association. Okay, now paying your taxes. If your association is going to pay taxes out of operations, then for budgeting purposes, you want to budget about 28% of your interest or budgeted interest income for taxes. Now, if your association is going to pay its taxes out of reserves, then you should budget 0 for income taxes. I'll say it again, if you budget if you're going to pay income taxes out of operations, then budget 28% of interest income for taxes. If you're going to pay your taxes out of reserves, then don't budget anything for income taxes because it's a reserve expense and you don't budget for reserve expenditures out of your operating budget. Now, CPAs, we generally are going to record income tax expense in the fund that generated the income. So if most of the time it's reserve interest that generates the income, so we're going to show the tax in the reserve fund. If you've got a rental property and it's in the operating bank account, then the income tax on that money is going to be in operations. Now that you're all even more confused here, that some reserve study companies show the interest income on reserves net of tax, and others show the interest income on reserves before tax. There's no right or wrong. There's no easy answer, but however you do it, I just bring up from the budgeting standpoint as to where to budget for income taxes. Chris had there's something she'd like mentioned because it sort of, I guess, falls within this tax note, and that's something called backup withholding. And backup withholding is when a bank is going to pay you interest, but they don't have your tax ID number. They are prohibited from paying you all the interest. Instead, they have to withhold about 30% of that and remit it to the IRS. Simple solution is just to give the bank your federal tax ID number. Then this all goes away. Easy solution. But it's not that you lose the money, it's just the money is claimed as a tax payment on your federal tax return. Okay, that said, I think let's all gather around the campfire here and we're going to talk about some war stories. Actually, I picked some here with names in it, and the reason is that they're either deceased or they went to prison. So it's all public record. The first one is a deceased management company owner by the name of Bob Pyrie. He was back in the 80s and 90s, and he stole money by paying his personal expenses with association money, wiring money out of an association's account for purported association expenditures that just went to his personal account. And when the money that he took got to be so large that he was going to get caught, he borrowed the money from another association and paid back the association they took the money from. Well, it grew to about 800,000, 900,000, and he was going to be going to prison, federal prison, and then he decided to take his life. So fortunately, that ended that. The second person is by the name of Chris Barna, and he went to federal prison for stealing about over $1 million from management company and a very large association. And how he got caught, it's one of the 5%. It's the accident. He would write checks to the management company out of an association's account, and it was a 2-signer account, and he was one of the signers, and he forged the other signature, and he took the check made payable to the management company to the ATM machine at Wells Fargo and deposited the money in his bank account. This went on until he stole about $1 million, and then one day, somebody at Wells Fargo compared the name on the check with the name on the account, and they weren't the same. So they called up Chris at his employment and said, Chris, you deposited a check payable to the management company in your account. And Chris told the bank, well, I'm an officer of the corporation, so it doesn't matter. And the bank got off the phone and then called again. This time they spoke to HR and they asked if he was an officer of the corporation. And shortly thereafter, he was escorted out of the building and so forth. And the last one is the former manager of Woodlake, its large association, San Mateo, that's Sue Lambert. Sue Lambert might still be in prison. She was sentenced to 3 years and 4 months for embezzling. Well, she shared the embezzlement with someone else who went to prison, but almost $3 million. she split it with the painting contractor. And that was all fraudulent invoices. And here it was uncovered quite by accident as well. She and the painting contractor taken about $3 million over 8 years. And one day when she was not in the office, she was where she usually would go, and that was at the casino to gamble. And the board president was looking through her desk drawer and found these blank invoices to the painting contractor, and started asking questions. And then from there, it all fell apart. So she went to prison. There's another guy by the name of Stephen Brown, had a management company in San Francisco, and he photoshopped the bank statements. Hard to believe it. He got found out because the wife of a board member wanted to see the actual bank statement instead of one that was put in the board package, and she got it from the bank. And wouldn't you know, the balance in the bank from the bank statement that she got wasn't the same as the photoshopped one in the board package. So besides that, Mr. Brown stole about $900,000 out of the trust account. It was the brokerage trust account, and he got probation. So anyway, Chris, you have any juicy gossip here?
Yeah, I think I sort of mentioned a few of them, but just might be worthwhile to reiterate the fraudulent activity we've seen. One had to do with email hacking, and then trying to send information to wire funds out of the account, and we nipped that in the bud right away as we did our callbacks, and that the fact that the fraudulent person didn't know we didn't send out wires of, hundreds of thousands of dollars, which is kind of ridiculous, but they went for the big bucks. The other one was on that credit card, debit card, where it was left unlocked with PIN numbers on it, for anybody to pick up. And of course, there was a fraudulent activity within 2 days, boom, the funds were gone. And there was one where during COVID, where, the association wasn't using third-party payables, which can be electronic means of paying vendors. And so checks were mailed to them because they weren't meeting in person during the COVID pandemic. And it looked like somebody intercepted those checks, maybe on the way out. It was on the way out because they were signed, but they added their name to it and then cashed it. And that was good. We were able to find those people. Banks will spend as much time as needed, but the typical turnaround to resolve these, especially in check fraud, could be 6 months or longer, because we have to review with the bank that cashed the checks, for the criminal. And so there's a lot that goes into it in getting those resolved. But wires, forget about it. Those once they're gone, and that's why we won't do them. There were some good questions. I don't know, David, if you wanted to pick up. I noticed there were 2 that I wanted to respond to, but I'll let you
sure.
or Connor work that out.
Yeah, I'll. Okay, I'm live now. So yeah, I actually have one too. That's kind of an interesting fraud story. The association manager was in cahoots with one of the suppliers, and similar to what Bill was saying, and they would get the bids in and look at the bids prior to letting out the contract. They'd look at the bids, and then the contractor that was in cahoots with the fraudulent story would know what bid to come in at, and would drop just ever so slightly before the other one, and any of the money that was between the actual cost and the bid was split between the two. So this happens. The guy did go to jail. I think he went to jail for 3 to 5 years or something like that. Quite a little bit of time. But they stole millions of dollars. And the unfortunate reality is, I think most of the time is you don't get your money back, and more likely than not, somebody uncovers a fraudulent activity and they don't report it. And that's a problem, because then what ends up happening is those people find other jobs and they have experience and they go to another management firm, they go somewhere else, and it just creates a problem in the industry. And there aren't very many that are like this, but there are a few, and really it needs to be reported. So I had a question of the two of you, and I mean, what do you do if you suspect fraud? If you're a homeowner and you suspect fraud versus, a board member?
We talked about doing due diligence in viewing the accounts and doing the reconciliations. I think I mentioned that a board, if you have a management company doing the accounting and producing those statements for your board packet, you can be added to online banking where you can view it at the same time. Maybe you're not doing the actual transactions, but you can view it. That's a great way to, watch where the funds are going. And, with the budget, most of those funds should be pretty standard. It's going to the same vendors every month. Sometimes the amounts change a little bit, but for the most part, it's the same every month. So, just being aware, doing what you're supposed to do, and that is reviewing those financials every month, and maybe as an additional measure to be able to view the accounts via online banking. And all the board members can do that.
So if you do find some irregularity, should you call the police, or should you talk to the board of directors, or should you call your bank and say, hey, look, something looks really weird here? And someone in the chat was saying that somebody had a credit card and was charging.
Yes, I saw that too, and that's a really good one. How do you get
action? What do you do?
Definitely, they can get statements and details and sources of the checks, of where the checks were cashed, especially if it wasn't to the intended vendor. And that information, the local authorities, not until you actually are wanting to report a crime, you want to get as much information as possible. So yes, get your banker involved to say, I'm concerned about, these checks. I don't think they're accurate or whatever. And we can pull against resources of exactly where they were deposited, and other, information that might be helpful. And on the credit card side, there was that question of the person that used the credit card for all their personal items. Well, again, you should be able to see the activity of the credit card statement and the transactions. One of the things I wanted to mention to help safeguard your accounts is to set up a separate account. And I know Bill said only 3 accounts, but we have your operating, your reserve account. But we do have a number of associations that will say, special checking, or sundry account, or on-site checking, something that they create a separate account. They put funds from their operating to cover, basically the minimums for those sundry items. That way, if there is fraudulent activity and it's not used for what it is, there's only going to be, so much that's going to be taken out. They're not going to have access to the full operating funds. And more importantly, the reserve funds, which hopefully you're not even doing that. There was one other comment that I wanted to mention. Somebody had mentioned about managers should never be a signer on the accounts. And I think they were referring to reserves. Well, that is correct. We don't like, managers shouldn't be a signer on the reserve accounts. That's for 2 board member signatures on the reserves. Very important. However, we do see managers on the operating account, because sometimes it is just the budget. It was already approved. The amounts are exactly the same for the most part throughout the month. And so some managers do pay those bills so that it can be done in a timely manner. But again, the oversight can be done by the board by having access to online banking to see that activity, and also getting a duplicate bank statement in the mail. That's another way of doing it.
Okay.
Yeah, sorry. There's that with a lot of the newer software for accounting, that the invoices, they're approved by the board, and then once that's done, they click and the check is generated by the outside party. It's already who already has the signatures on file and places the signatures on it. So it bypass the idea of having the manager on there is not applicable anymore as long as the board is approving there aren't invoices. And there's also we'll get back on the credit card. The one instance, remember, where somebody did misuse the credit card, you give the person who stole the money the opportunity to repay it. I mean, otherwise I'd agree.
Yeah.
Go report it to the police, and then most of the time though, this stuff does not get reported at all because everybody is, believe it or not, this is how Pyrie kept going for so long. This is how Steve Brown, he still kept his accounts after everyone still knew he stole money. It's because they're too darned embarrassed to admit that they did something wrong, that they let this take place. Hard to believe, but that's the way it is.
Yeah, they're asleep at the switch is kind of the issue, and that's a problem. Right. And they hope it just goes away, but they're really just kicking the can down the street here.
Right, that's right.
Okay, so we're going to be getting into the Q&A session here. So I'd like to thank Kevin Boland Insurance Agency once again for sponsoring this session. Short reminder to use the thumbs up icon at the bottom of the page for your favorite questions so that you're not going to have time to do all of them. We have about 10 or 15 minutes to go here, 10 minutes, and we can jump on those. So if you wouldn't mind taking a couple seconds here and run into the thumbs up section and read the questions and give us your vote. We'll all pick those and ask them of the speakers. Let's do this. Okay, well, we have 12 upvotes from Kay Dyak's a question. Should the board be concerned if owners have not received the CPA year-end financial review by now?
Okay, the first thing is the association required by either governing documents or civil code to have a review. Secondly, is the year end of the association December 31st? If it's December 31st, then the owner should have gotten, if it was required to have one, a review financial, a minimum review by April 30th. So don't know that. If your association is 20,000 in revenues and then it's no review requirement unless it's governing documents require one. But let's say it does have a December year end. Let's say revenues are more than 75,000. The concern, I don't think it rises to the level of losing sleep, but it should raise it. If you're on the board, you should ask management, and if you're not on the board, you should ask your board. Hope that answers the question.
Yep, I think so. Okay, the next one is 10 upvotes here or actually no, 11 upvotes. It's from Helen. How about vendors and professionals chronically over invoicing and getting away with it, not being stopped by management, board, or authorized check signers? I've actually heard of this quite a bit, actually.
Not that I've doubt you, Helen, but how do you know this? How do you know? First, you'd have to look at the invoices to see if the vendor's billing for it. And secondly, how do you know that that's what they did? Not that I'm doubting you, I'm just raising the question.
Well, we can't hear her, so
she'll have to
type that in.
You know, one of the things that Bill had mentioned too with the software that's out there today for accounting and that board members can go online and approve bills. It's much more prevalent now, and it's a good thing. Yeah. And they can see everything. They can see the invoice. They can, and they're the ones approving the checks. And if they think there is an issue with that, then they don't have to approve it and won't go out, and they can have the discussion with the management company to say, and the actual vendor to say, you know, we're disputing this. Can you please provide the backup or more detail showing, you know, what was done and the, you know, to match the invoice. So the, you know, the software out there today is really, really good because it allows the board members to be more active and controlling the payables instead of relying, you know, once a month and that's it. And they can see everything, the activity and history and all sorts of things. So that would be where I would start.
Okay, well, let's talk to Anonymous here. She asks, or he asks, at board meetings, a management company usually reviews the financial statement instead of the board treasurer. What is the best practice for providing that information at a board meeting?
Well, the civil code addresses the reviews of the, and what either a committee, which is the treasurer and one other, or the entire board should do with the monthly or quarterly financials. The management company knows, they assembled the documents, so they're familiar with them. It's the obligation for the board to do this, to do the review of that information. Oftentimes you could do it, I mean, I think the treasurer and another person do it before the meeting, and then they report at the meeting that they did perform that function, yeah, and nothing came to their attention.
The board packets have the ones that I've seen are very detailed. You've got, as Bill said, you have the balance income, you know, the overall broad brush position, the financial position of the association. And then it drills down to actually seeing the bank statements and the GLs and everything. Everything is, you know, reconciled and provided to the board. However, the board can, again, be very proactive by, you know, having access to the accounts to see the day-to-day activity. And in the software that's out there that a lot of management companies using, they'll see even more, not just on the banking side, but the actual invoices and way ahead before the board meeting. So they could be reviewing it as things, you know, pop up during the month.
Yeah, and I don't. I think the question's about what's the best management practice, and I think what I'm hearing is that it's okay to have the manager review the financials as long as they've been reviewed by the treasurer or whoever the committee is before the meeting, and it's agreed that that's correct. It's pretty normal to have the management firm do the review of the financials in the board meeting.
Sure.
Okay, so here we go. Back to the, well, Elaine, here we go with 7 questions. We have an association from hell, a father and son, and they will not release records. They both sign the checks. I know there is fraud and embezzlement. The law has no teeth. We are being ripped off and nowhere to go. The frustration level here, obviously. What do you think we can do? So what do? They've got, I hear this a lot too. And they go to the board and they just, you know, and they don't hear anything, or they're a board member themselves and they think something's going on, and they, you know, do they go to the FBI?
It sounds like a legal question.
Yeah, I know. It's maybe to a attorney in our industry, and I think there were a few even on this seminar, you know, that
yes,
you could look up, but. You go to the ECHO website and you look for those law firms and attorneys and then maybe call them to have a discussion. I don't know if this association is self-managed, but on occasion you see a board member that, you know, call it the bully board member that wants to control everything and makes all the decisions and thinks the accounts are under their own, you know, control. And that could be a real scary issue. I've heard of some associations that have family members on the board and multiple ones because they own a bunch of units and they think they can run the association as if it's their own, you know, apartment buildings. And that's a little scary too. So yeah, you got to step up, not let, you know, one person try to control the association. And I would talk to an attorney about what next steps can be done to make sure everything's transparent and you can, because that's what the board's supposed to do, not one person.
Yeah, and then I'll add to that, which is a really good, you answered this properly, I think correctly, it makes sense. But you do have conflict resolution strategies in Davis Sterling in the law that you can follow. And you also probably have something, or you may have something in your CC&R, your governing documents. And then ask for those meetings and keep records of asking for those meetings. And you can tell them what it's about. And then that will actually give you a specific legal defense if you take them to court, whatever. If they're not doing this, Elaine, they likely aren't managing the association according to Davis Sterling anyway. And so there's a lot of other things like election laws and what have you that need to be done. And you will have more than one recourse to follow, and you potentially could get your legal fees returned. So I would suggest that talk to an attorney if you want to go that route as well. First step is to go through internal dispute resolution and then an alternative dispute resolution and then go from there. You can always take them to small claims court as well if you think it's a small amount of money. Helen, I believe association management companies should be regulated. So much money are handled by the management company, yet there is no government agency regulating them, similar to the CSLB that issues licenses to contractors, complaints. So here's a statement filed by the investigations, et cetera, et cetera. Why don't we regulate management companies in this similar manner?
I think some of them are in a way regulated, don't they? Don't they need a, Dave, don't they need to be licensed by the Department of Real Estate?
No, they don't. Years ago, what ended up happening is the management firms lobbied the California State Legislature not to require licensing. This is a long time ago. And what they did is they wanted to have self-regulation. And so if you have a problem with a manager, you can go to the CAI or CACM, California Association of Community Managers, and if they are certified through those organizations and they have an ethics process that you can use. That's really your recourse. And your second recourse is going to civil court. Most of the time, it's completely legitimate to go through civil court. And I think that's the argument that was made. Is that it would be cheaper for the state if they just use the civil courts and not set up a new.
Yeah, because the management company it's not like the realtor who has a trust account and keeps the money that they can have control over. Each association has its own accounts and has control over its money. So signers on the account. So it's not like the management company has their money. You may not like how they manage the association. That's something else.
Yeah, technically they're an agent for the board, so and therefore the community.
And there's management companies that take out a bond, insurance bond to have additional protection. Good too when you're interviewing management companies to ask them about things like that.
Okay, so we have just maybe one or two more questions. This is from Karen Harris with 6 upvotes. Do you think the high rate of financial fraud being discovered only through whistleblowers is an indicator of the lack of effective outside enforcement? If not, what does this mean?
Wow. Oh, that was your statement, Bill, on the.
I can only tell you what I might guess, and I don't think so. I think it's just the nature of things. Period. That there's lack of or greater enforcement is going to reduce fraudulent activity. It's just there's no. It's not that. I think you just have to be more vigilant and exercise good business practices instead of thinking that there should be more regulation. And I don't know, if regulation is going to be your answer, because then no one likes to be overregulated. That's for sure.
Well, banks are highly regulated.
That's right.
And we all remember, I think, what is it, last decade, that a large bank was faced with a $3 billion fee because of practices made, which was considered sort of fraudulent in the sense that they were creating fake accounts, actually. And it kind of stems from the incentive and motivation that people are incentivized to.
Well, that was Wells Fargo.
Oh, God, you're not supposed to say names. But
My
anyway,
bad.
one of those banks, right? But it was, huge fees. And so you should feel good pretty much about banks. Banks do not want to do that. That could, Wells is big enough that probably can take that, but it ruins the reputation, and it really does wreak havoc for them in doing business. So banks take fraud, whatever, very, very seriously. We're highly regulated. It's really important because it is our business, and it could just ruin it. Not only fines, people can go to jail, and there's a lot of bad consequences when banks are involved on that.
Okay.
But did you get that other one, the sixth one on the, because I certainly wanted to talk about that FDIC one for the anonymous attendee.
Sure.
Six, it had a 6-1
okay,
about
regarding
FDIC.
The number of bank accounts, FDIC insures
yes.
$250,000 per bank per ID. This may require additional accounts. Echo would like to answer this question live. Okay, answer it live.
Oh, cool. Oh, yeah. So person totally correct. It's people always get that wrong a lot, that they think it's $250 per account. So they typically, associations have an operating account and a reserve account. They think, oh, well, I got $250 on the operating, $250 on that. No, it's by your tax ID. So you could have 2 accounts, you can have 10 accounts. It doesn't matter. Every bank will insure, if they're members FDIC, and most are, they will insure up to $250 by that tax ID, which is why we have placement services as a viable product. So you can still bank with the same bank, and that bank we can place funds outside of the bank where it's insured by those other banks, but you're still just working with your primary bank, and you have statements on that to track it, et cetera. And it's a real helpful and needed and viable product that the HOA bankers do, or banks do, provide.
Okay, well, we have 30 questions in the Q&A, and there are some questions in the chat room. I wasn't even looking in the chat room, and I just noticed that. So we're at the bottom of the hour here. We should be finished. So I'm going to just go ahead and give my concluding remarks, and I want to thank you for being a member of ECHO. But if you're not a member of ECHO, this year ECHO has planned more than 60 online meetings and in-person events. In addition, we serve a vast array of resources for HOAs, including quite a bit of printed material, including the Davis-Sterling and the Sterling Act. You can join ECHO by going to our website at www.echo-ca.org and just click on to the membership tab. For those of you who are interested in meeting in person, we are restarting our regional resource panels. The first panel meeting was yesterday in Novato of the North Bay Resource Panel. The Central Coast Resource Panel will have its first meeting on May 18 in Capitola, and all are welcome to that. There will be lunch served, and there will be drinks, not alcoholic. Let's see, also, we are excited to invite any HOA board members or former board members to join the ECHO HOA Board Members Club. This exclusive group meets every second Tuesday of the month from 5:30 to 7 o'clock and features a unique opportunity to learn from your peers. Please consider joining the club. We currently have over 220 members who share information and learn from each other's experiences. Sorry, no vendors allowed. So this is just for people that are serving on the board and are members of ECHO or have served on the board. And it's a great group. They have a really good conversation. If interested, please click the sign up sheet or contact Patty at pcurzette@echo-ca.org. This concludes our planned program for today. Thank you to Chris and Bill. As always, you did a great job for their informative presentation. Once again, thank you to our sponsors who made this broadcast possible for everyone to view. It will be made available to you at home, and you can give it to your other board members if you like. And of course, thank you to you, the attendees, for participating in today's webinar. ECHO appreciates your investment in education to build better HOA communities.